One of the traps I see a lot of DIY investors running into is just finding a creator and just thinking, oh, this person is like the expert, and so I'm just going to follow everything they do to the T.
DIY investors today are more connected, informed, and engaged than ever. And today we're going to dive into really how they think, from the role of community and content to trust and decision-making influences, and how platforms like Blossom are shaping that experience. So we'll touch on also how investors are handling volatility and the behaviors that matter most long-term. Just a reminder that we're not providing any investment advice or recommendations. Today is all about education and information for Canadian DIY investors. Today, I'm joined by Max Nicholson, co-founder and CEO of Blossom Social, one of our sponsored partners. Max, thank you so much for being here today.
Yeah, thanks for having me, Erin. Excited.
Taking a break out of all your travels, which is awesome. I first met Max, I think it was back in 2022 when you first launched Blossom. And I think you had 500 downloads in the App Store. Maybe?
Was it really that long ago? That's a while. Yeah, it's been a minute.
And now how many downloads do you have? How many users are on the platform?
We just crossed 700,000 I think this month. So it's wild. It's wild that it's been 4 years, and I mean it's definitely been exciting 4 years with lots of growth, but
it's been exciting. For those of you who haven't found Blossom yet, it's a very popular, as you can see by the numbers, social media and portfolio tracking app that's really designed for DIY investors. So I really liked it. There's a lot of learning opportunities on there. They've since launched a learn and earn program where you can take a course and get a couple bucks into your account if it's linked. But they also have the ability to just go on there and follow your favorite investors or influencers and see what they're up to in their portfolio and hear their rationale for the different trades they're making. So it's just given this whole new level of transparency to investing in social media online. So Max, I know when you first started into your career, you were selling cupcakes, making cupcakes.
Yeah,
that led you to give us the story in terms of what caused you to launch Blossom and what's your favorite thing about the app.
Yeah, no, that as you're alluding to, my very first business, I grew up in the Kootenays in a town called Grand Forks, BC. We had like 10,000 people. I sold cakes and cupcakes at like the locals farmers market. So that was like my first foray into business. But yeah, I mean, my dad's a welder. My mom was like a gardener growing up. And so we didn't really have much exposure to investing or like investing education, even in school. Like I think there's, especially in Ontario, been like a big push for financial literacy in schools, like in high school, which is great to see. But back in my day, there wasn't really much in the way of that. And so, yeah, the inspiration for Blossom really came from like the COVID pandemic. There was this huge wave of interest into DIY investing, and really social media was a huge channel to drive people into the markets. And so we saw like, okay, clearly social media is inspiring investors to get started. But there really isn't a platform that actually helps, investors make good investing decisions, helps, people actually learn. Like a lot of the platforms like, Wall Street Best, for instance, were actually more driving almost like gambling, which is fine if that's what you want to do. But for, if you actually want to learn how to invest and build your wealth long term, we thought there was a big gap for that. And, knock on wood, it seems we were right now 4 years later, but that was sort of the inspo.
Yeah, that's amazing. I love that story. And it feels like you've really just hit the timing in terms of this wave towards online digital investing, and all the stars are aligning. How would you describe sort of the modern DIY investor, and how have you seen that shift play out over the past 5 years or so?
Yeah, I saw, obviously you sent me some of these questions so I could gather my thoughts. And this I thought was like an interesting one, because I think it really accelerated in the COVID pandemic time. Like, before that, I think that the primary wave was like the Robo advisor, right? Even if you think of like platforms like Wealthsimple or like Betterment in like the US, they were primarily like Robo advisors. People were sort of setting it and forgetting it. Now I think the wave of Robo advisor has sort of gone down. Like it doesn't seem like as many DIY investors are using it. The platforms have evolved to more like now you can kind of be much more in control. And so I think that was really accelerated in COVID because people had so much time to like optimize their portfolios and like actually think about these things.
Too much
But that
time.
really never went away, right? Yeah. Well, what were you saying, Aaron? Were you
I
the
just said
same?
we all had too much time.
Exactly, right. But then I think like that habit, which I think was a good habit that we built like during that of saying, let me actually learn this and kind of become in control of my finances. That seems to have really stuck around. And I think also with social media, like a lot of the finfluencers, right, that I'm sure we'll talk about, really came to prominence like in the last like even 2-3 years. I mean, Brandon, who I think you've had on, Brandon Beavis, also one of my co-founders. He was like one of the first YouTubers in Canada around investing, and he really popped off during COVID as well. So it's really been this shift from like I'm just gonna set it and forget it, buy this like robo advisor, like one size fits all, to feeling more empowered to be in the driver's seat, be in control, and like customize a bit more. I think with respect to your portfolio. I might be biased, obviously, because our audience is, sort of the audience that is going to be a bit more customizing, but we have a pretty good pulse, I think, on especially the Canadian ecosystem these days.
Yeah, I think that's obviously a clear motivator is that need for control. Um, what about like I know you have access to all the flows in Blossom. Do you see that playing out in the trading? Like, is there a lot more trading going on? Is cost a motivator for people going the DIY route more? Like, how do you see that showing up on Blossom?
Yeah. Well, I think cost is almost certainly a motivator for people to do DIY as opposed to like an advisor, right? Because I think, especially with the younger generation, more folks are saying, they want the control and they don't want to pay the percentage fee on say like a 1% fee, but also it's like a lot of like the advisors too are moving more upstream. I think there was something with Charles Schwab, or where they were saying like, okay, we're not even really going to focus on people with like less than $1 million portfolios. So it's as much a cost as much as it is like people starting investing earlier and then not having access to an advisor because their portfolios are too small, and so like DIY is sort of the option they're left with, or maybe going to the one of the big banks, but then in that case it is going to be much more of like a one size fits all solution with the advisor, because it's difficult for the advisors to do at this scale with such small portfolios. So for folks starting out who want to actually start learning with like a $10,000 portfolio, you kind of need to some extent go the DIY route. So, but I think as with respect to the flows, like cost is definitely, I think, a priority when it comes to like the index ETFs or the asset allocation ETFs. Is that WC is the dividend one? I
Yeah,
think
that's the
like
covered
those
call.
ones, I think people are more are not going to be as cost sensitive because they are looking for like they understand, okay, there's something unique about this ETF. It's not just like a index ETF that tracks the market.
Yeah, I think investors at the end of the day are becoming more sophisticated and educated on what they're owning and recognizing that, yes, keeping costs low is going to compound over time and you're going to get to your goals faster. But also, in some cases, there might be a reason why you're paying that higher fee. And I think there's definitely more acceptance of that than there was when I started in the ETF industry. It was all low cost beta, broad beta index ETFs. And now there's all these new flavors that are coming out that they might cost a little bit more, but they're really delivering an outcome that somebody wants. And there's an active manager behind the scenes. So they're understanding a little bit more in terms, I think, of what goes into it. So they are becoming more educated. I wanted to ask you, you mentioned finfluencers and the rise of social investing, and I guess shared experiences and connecting with people that you hear online and their personal stories. How do you see this playing out? How has it influenced investors in terms of their confidence and decision making?
Yeah, I mean, I like what you said about like the personal stories. I think that's definitely like seeing people online that are I guess like you who are investing. I think has done like a huge amount of benefit for the ecosystem. Like I think of who you guys work with, like Joy, right? Like her background working like 3 jobs and working as like a server and then making content like for her like younger self. You look at her demographics, it's like 70% women in that like age range as her. It's like a really like previously underrepresented like segment, or even like Asia, right? Who's with all the events she's throwing for like female investors. It's like I remember there was like a LinkedIn post I made where someone was almost like talking smack about some of them because they're like, oh well, they're not like they don't have their degree in finance, or so maybe they don't know what they're talking about. But it's like it's not really about that, especially for like a beginner. It's someone saying, I always thought of investing as something that was like the guys on Bay Street in the suits would do, and not something like me as like a nurse or something should have any like business doing. And so I think social media has been very, very good for that, in like helping like underrepresented folks like be like, oh, like this is for me as much as it is for like the finance bro on Bay Street, and like really opening up. So I think in that sense, it's been a positive. I'm happy to speak to some of the, obviously there's negatives and pros and cons, but in that sense, I think like it's really driven a lot more confidence for a lot of people.
Yeah, I love that. Being able to like see that not all these people grew up to or with a finance degree and went to university with finance, but are still able to understand these investing techniques and, simply getting started is at the end of the day that I think is a huge motivator that influencers have given to a lot of like that next gen of investors. Just get started. But you're right. There is a lot of financial content online and a lot of it is great, but there's definitely some questionable things out there too. How did DIY investors decide, I guess, who to trust? And can a platform
Yeah.
like Blossom be used to sort of weed through them?
Yeah, I think so to some extent. I don't think it can like fully replace. I don't think any of these things like replaces like critical thinking. And so like Blossom obviously like drives a lot of transparency. So because people are sharing what they're investing in, which I think adds a lot of, it's like people putting their money where their mouth is. So that was kind of, but then like, you have to be mindful more broadly. Like we try and do a really good job on Blossom of like actively like moderating and deleting like scammers. On other platforms, like there's still like lots of scammers, so I think that's something you need to watch out for. But like the actual like scammers aside, I think like one of the traps I see a lot of DIY investors like running into is just like finding like a creator and just thinking, oh, this person is like the expert, they know everything, so I'm just gonna like follow everything they do to like a T. And like I think this is almost a cycle that can get like amplified in bull markets, because like in bull markets you can have people who are just like very publicly making like risky bets, and like since it's a bull market they like can tend to possibly outperform the market because they're taking on like outsized risks and like the whole market is going up. So then you have these beginner investors being like, oh my gosh, these people are like geniuses, I'm gonna like follow everything they do, right? And so I think like that's where it's like, if you haven't actually educated yourself and like built the basic knowledge to like understand like risk and like market fluctuations, and how and again, not complicated things, but like spending like the 5-10 hours like building the foundation, I think then you can run into this trap of like thinking that someone is like an expert when really they're they might have a lot of knowledge that you can like pull from, but you still need to like be actually critically evaluating like their arguments, comparing it to your situation, your time horizon, your risk. And I think that's one thing I do like about Blossom is like you have people, there is a much more discussion, right? Like you have people who will share and then someone will counter that point, and then the best use of it is not to just say, oh, blindly follow it, but it's like, okay, different people have different like viewpoints of this, probably because it is a nuanced topic, and there's it helps to understand like both sides, right? So anyway, again, maybe a little bit off topic, but I think like to sum it up, like I think the biggest thing is like develop the critical thinking and know that like no one is like an expert that you should just like blindly follow. Like people are, the markets are. If someone had like a golden wand and they knew exactly how the markets were going to do, they're going to be like infinitely rich beyond their wildest dreams, right? So like the reality is like some people might have more information and you can listen, and it's good information, but there's no like, yeah,
Important to know that they know nothing about your situation, right? Like it's like a one-way
exactly,
communication stream. Like they don't know anything about your individual circumstance. So yeah, good points for sure.
yeah,
Um, I'm curious. There's been so much like I I feel it. The headline news, the more volatility, like that fast news cycle, something new every day that could influence markets. And I think it's leading to a lot of investors feeling a lot of emotions. But I'm wondering, on your platform, do you see this coming in the chatter? Like, are people more disciplined these days, or are they emotionally reacting to what they're seeing in the news?
Yeah. I mean, there's been a couple posts on Blossom from, I can't remember which user it was. I think it was a user named Ronan who makes some really good content. But it was really around like the almost we've shifted from like panic like selling to in some cases like panic buying. Like the investors are more disciplined in that. I think most DIY investors know not to like panic sell, but then sometimes you have like, okay, the markets are like going down and everyone's just like buy, 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 buy. And the thing is, like, that's actually worked very, very well over the last like year and a half. Like all of the news articles coin it like the taco trade, right? Like the
Yeah.
Trump always chickens out or something, where that's something will happen. There'll be this big headline, markets will crash, and then it's like, okay, it ends up bouncing back, even with like the US Iran war. But I think like it's probably worth being somewhat cautious about that as like a DIY investor, because like if you zoom out like 20 years, that strategy doesn't always work, right? So it's not to say that like panic selling is better. It probably is like somewhat of an improvement where people aren't just like emotionally selling, where they have more confidence in the market. They are thinking long term, but I
Do
think
you
it,
think
it
that's a function of the demographic on your platform, I wonder? Although you have mentioned there's a bit of a silver wave coming on Blossom. But do you
yeah,
think that's a function of these people having much longer time horizons?
probably like we did a like a really good survey. I'm not sure if we sent it your way yet, but yeah, the core age is like 25 to 45. Average age on Blossom is like 34, but over 50% indicate that they have like a 10 plus year time horizon. So definitely I am speaking from more of that long term. I wouldn't be able to speak as much to how someone with like a large retirement account, right, who's like thinking retiring in 2 years is going to be feeling about like all the news. I imagine it's quite stressful with how much the markets are whiplashing.
Yeah. Okay, final question, Max. I want to get your thought. In looking ahead, in your opinion, what skills or behaviors are going to separate a successful DIY investor from the rest over the next
Yeah.
decade or so?
Yeah, I think honestly, I'll just bring it back to my other point around like not skipping the education part. Like social media, I think is a very valuable tool for ideas, but it shouldn't replace your own critical thinking. Or to your point, like really making sure that you understand your own personal situation, do some introspection on your own risk tolerance, your own time horizon, and then any idea that you see, whether on social media, whether on podcasts, whether on on this channel, right, the ETF Market Insights, like don't just follow it blindly. Like actually use critical thinking and develop the tool, educate yourself so that you can make better decisions and aren't just blindly following anyone. So that would be kind of my thinking of what's going to be a successful or not successful DIY investor.
Yeah, I think it's great. Blossom is such a good tool, but it's like one of many tools, right? And you need to use all those tools. But
Yeah.
congrats again. It's an awesome app. Thank you so much for joining me. I also wanted to give a shout out that Blossom is hosting a Blossom Con, your tour in Toronto and Vancouver this summer. So come and check that out. BMO ETFs, I'll be there. Max will be there, and it's at the Rogers Center again this year. So I'm looking forward to that. How many are you expecting, Max?
We're definitely expecting at least 1,000 at the Rogers Center. Knock on wood, we'll get up to 2,000. Obviously, Rogers Center is a big venue, so we have a lot of room. So everyone's welcome.
All right. Well, thanks again for joining me today, Max. It was great chatting with you.
Yeah, great to chat with you too, Erin.
That's all for today. Thanks for joining us, and we'll see you next time. Bye for now.